Welcome everyone. My name is Scott McCollister. I'm part of the investor relation team at WACKER Chemie AG. We published our second quarter results on July 26th, and I'm happy to run you through the highlights. The second quarter of 2024 saw a good result in chemicals and polysilicon. While overall market conditions remain challenging, we see improving conditions in a number of areas. The strength of order intake varies from region to region and application to application. It is still too early to speak about a broad-based recovery. Group sales came in at 1.5 billion euros. The combined EBITDA of the four operating segments was 205 million euros, up 11% previous quarter. Group EBITDA, however, was 7% lower quarter on quarter, mainly due to the other segment. Chemicals EBITDA came in at 149 million euros, up 17% year over year and 9% quarter over quarter. Demand for specialty silicones developed positively. We are now looking to raise prices for certain applications. In polymers, we see seasonal quarter-on-quarter improvements in construction-related applications. In BIOSOLUTIONS, we opened the new mRNA facility in Halle at the beginning of June. In the second quarter, polysilicon reported a sequential improvement in earnings, supported by lower energy costs. EBITDA came in at 55 million euros, up from 43 million euros in the previous quarter. Looking to our full-year outlook, we confirmed our full-year guidance and now expect EBITDA to be in the upper half of the 600 to 800 million euro range. The range is defined by improving conditions in chemicals and reflects current market conditions in polysilicon. Looking to sustainability on the right side of the slide. At WACKER, our efforts are targeted at lowering the footprint of our operations and enabling and improving the performance of sustainable products. We have committed ourselves to reaching net zero by 2045 and have shown good progress towards reaching this target. There is a strong customer pull for sustainable products and solutions. Silicones plays an important role in enabling electromobility by improving the performance of batteries. At this year's battery trade fairs, we presented new specialty solutions which enable and improve the performance of sustainable products such as EVs. With the completion of our new mRNA facility in Halle on June 3rd, we achieved a key milestone in BIOSOLUTIONS. The new production lines more than triple capacity at the site, which is now part of the German Pandemic Preparedness Program. The new site provides BIOSOLUTIONS with a strong foundation for further growth in biopharma. As a contract development and manufacturing organization, we will produce advanced therapies targeting areas such as oncology and personalized medicine for our customers. We see growing interest from customers who are attracted to our pDNA and mRNA capabilities in larger capacities. Looking at the profit and loss, sales came in at 1.5 billion euros, down 16% year over year. The development in sales was driven by several puts and takes in each of our segments. In chemicals, lower average selling prices were offset by higher volumes. On the other hand, higher average selling prices in polysilicon were offset by lower volumes sold for solar-grade applications. Although we benefited from higher specialties demand and lower energy prices, the effects of the lower polysilicon volumes and the lower prices in chemicals left their marks throughout the profit and loss. The second quarter group EBITDA was 160 million euros, 37% lower year over year. As with the development of sales, several factors are at play here. The EBITDA contribution from polysilicon contracted by 100 million euros to 55 million euros. On the other hand, the chemicals EBITDA expanded by 21 million euros to 149 million euros. This was due to improved demand both year over year and sequentially. The other segment was minus 45 million euros in the second quarter. This primarily reflects the charges related to the embedded cost of CO2 in our energy bills, which will be reversed in the fourth quarter. Now looking at the last line items. Including the contribution from Siltronic, the results from investments were 5 million euros. Net income was 35 million euros. This equates to an earnings per share of 0.58. Our balance sheet shows strong financials with 1.1 billion euros in liquidity and 4.6 billion euros in shareholder equity. Net working capital increased by 278 million euros compared to the end of last year. This primarily reflects the sales development in chemicals with respects to accounts receivable and higher inventories in polysilicon. At silicones, sales were 719 million euros, up 3% year over year and slightly ahead of the preceding quarter. At 90 million euros, the EBITDA was well above last year's result. This was primarily due to higher specialty volumes, a good mix, lower raw material costs, and better plant loading. We have updated our silicones outlook for 2024. We now expect a low double-digit percentage EBITDA margin, up from high single-digit before. Overall, specialty volumes are at a good level, but margins remain well below target. This is now primarily a function of price and raw material costs. As I just mentioned, we do not see a broad-based recovery, but there is good demand for certain specialty applications. For these applications, we intend to benefit from the stronger market conditions. Sales in polymers were 389 million euros, 7% below last year. This was primarily driven by lower prices following the development of raw materials. Average selling prices were comparable to the previous quarter, and higher volumes underpinned the 5% quarter-on-quarter sales growth. We see good demand for consumer-related binders, with volumes being clearly up both year over year and sequentially. Construction-related polymers are comparable year over year and showed some sequential improvements due to higher building activity during the summer months. Higher asset utilization rates supported EBITDA, which came in at 59 million euros, up 5% from the previous quarter. For 2024, our full-year outlook is unchanged. For construction polymers, we see good demand in Southeast Asia, Americas, Middle East, while Western Europe and China face headwinds. Consumer-related applications see good growth in adhesives for paper packaging, in part driven by the plastic-to-paper trend. At BIOSOLUTIONS, sales came in at 98 million euros, 37% higher quarter over quarter. Sales were primarily supported by growth in biopharma. We opened the new mRNA facility at the beginning of June, and we booked 1 month of the annual reservation payment in the second quarter. The payment, therefore, only had a limited impact on the second quarter EBITDA, which came in at roughly 1 million euros. Our full-year outlook for BIOSOLUTIONS is unchanged. Sales growth will be driven both by biopharma and bioingredients. We expect a significantly better result in the second half of 2024. POLYSILICON reported sales of 232 million euros, 23% lower quarter over quarter. The primary driver was the significantly lower solar-grade volumes sold. Sequentially, EBITDA increased to 55 million euros, up from 43 million euros on lower energy costs. We have updated the full-year outlook for polysilicon. We now expect sales to be in the range of 1.1 to 1.4 billion euros, with an EBITDA in the range of 200 to 300 million euros. During the first half of 2024, we generated nearly 100 million euros in EBITDA. We are now halfway to the lower end of our full-year guidance range. Charleston has successfully ramped, and we expect an improved operational performance in the second half of this year. There is some uncertainty in the solar industry currently, but our guidance range addresses the most likely scenarios. Looking at our net financial position, in the first half of 2024, we generated a gross cash flow of 4 million euros. Gross cash flow was held back by investments in working capital following the development of chemical sales and inventory in polysilicon during the second quarter. Cash flow from investing activities was 310 million euros. Our CapEx is directed at increasing our specialties business in silicones, increasing our semi capabilities in polysilicon, as well as the new mRNA facility in Halle. After the dividend payment of 149 million euros during the second quarter, we ended the first half with a net debt of 661 million euros. So to sum it up, WACKER is well positioned financially and strategically. We have made good progress towards reaching our full year targets. We continue to have high focus on costs and strengthening our specialties businesses. While we can't do a Q&A here, myself and Jörg Hofmann are always available for your questions, so please give us a call at any time. Thank you very much.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.